Hey guys, welcome back to another episode. This is my weekend series where I kind of take a quick look at 4 stocks that I'm adding on my buy list right now. And just like many of you, right, I put money to work every single week. So every single week, I'm either looking for a new investment or an old investment to increase my overall position sizing. Most of the time, it's usually an old position, and I'm just looking at great times to kind of dollar cost average. And I don't know, it's been getting a little tricky, right? I've definitely been talking to a lot of people in the community right now, and it seems like stock prices right now, the lack, I want to say, of buying opportunities in a lot of the market right now seems to be dwindling. But I'm a firm believer of dollar cost averaging. So some of the stocks I'm going to take a quick look at today, some of them I believe are giving some form of buying opportunity. Others I believe are more of a dollar cost averaging opportunity for me. So if this is your first time here, guys, make sure to hit the thumbs up, make sure to hit the subscribe button, and let's get started. So the first stock I am going to take a quick look at is AMD. And this is the semiconductor industry, right? This is my bread and butter. This is what I went to school for. This is what I've done career-wise in. It's just a semiconductor. And I really am excited to own AMD. It's one of my top 3 positions in my portfolio. And right now, I believe these are levels where AMD is more of dollar cost averaging. Let me explain AMD to those that are not familiar and some of the recent news for the company. First, we can see from its 52-week high, the stock is down about 12.1%. So it's seen quite a correction. Still has it's a big company, market cap of $126.6 billion. And like I mentioned, today we're taking a quick look at 4 stocks. We're going to look at some of the good, some of the bad. And it doesn't mean I'm going to buy all 4 this week. It's, out of this 4, I'm probably picking out 2 or 3, which is my normal. But I believe all 4 are giving some form of opportunity for me. So AMD, I mean, they're hitting markets I'm super bullish in: the data center, the PC, and the gaming. And in data center, right, they have their CPUs, their GPUs, and software that are really in this market. We're going to take a quick look at their earnings, but strong growth. In the PC, same thing. They have the CPUs, GPUs, and in the gaming, they pretty much have the GPUs. And they also have kind of semi-custom chips that are used in a lot of the console gaming out right now. So if we take a look at their most recent earnings, which they reported, I believe in August or late July, it's real recent, revenue was $3.85 billion for the quarter, and it was up almost 100% year over year, and it was up 12% quarter over quarter. Gross margins are sitting pretty nicely at 48%. And this growth is driven by everything from their graphics and computing segment for laptops and regular PCs, to as well as the enterprise, right? The server GPUs, the server CPUs, and their embedded semi-custom. And these are the chips that are, like I mentioned, a lot in the gaming consoles out right now. So for me, another cool thing, in August 30th, so not too old, AMD's processor was picked by a national laboratory to prepare for a supercomputer. This supercomputer is actually expected to start, they already are delivering, schedule and deliver install in August of 2021. So it was actually pretty quickly, and it will go on use starting early 2022. So great move. It just shows the leader and the power ship of AMD. AMD, I do want to say one of the biggest red flags or yellow flags at the moment is the chip shortage that we're kind of experiencing. AMD has talked, their CFO has talked about ways to mitigate what type of products they're going to be using. And I'm pretty excited about it. I mean, the demand for mobile laptops, as hybrid work, as going back to school, as working from home, as holiday seasons are coming, is still pretty strong, and their strength in the data center market is also still looking pretty strong. So that's the first company. The second company I'm going to say is one more controversial, but first let's take a quick listen to today's sponsor, a great reason why I'm able to provide so much content to you guys for free. I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services the Fool offers. Through the Motley Fool Stock Advisor services, you get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done amazing returns. If growing your money is something you'd like to do more of this year, you can visit fool.com/Jose Najarro or click on the link below for access to my special offer and decide if the stock advisor is right for you. Thanks again to the Motley Fool, and now onto today's video. So the second one we're going to take a quick look at is Facebook, and this is ticker FB. I mean, everybody is familiar with Facebook. This is, again, another position in my portfolio right now. This is one I believe I haven't added on for some time. For 2020, it was a tier 1 stock for me. I'm very, very happy with its results compared to 2020. But it's been some time since I've added, and I do believe I need to dollar cost average as my portfolio is getting bigger. This size is kind of dwindling because I haven't added much to it, and I want to kind of change that throughout times. Right now, again, it's more of a dollar cost averaging, not a time to really build up a base position, in my opinion. So Facebook right now, it is $1 trillion market cap. And first, revenue. Right now, Facebook is mainly known for its advertisement platforms, right? That's where most of its revenue comes from. For its most recent quarter, $28.5 billion came from advertisement. About half a billion came from other. And the other is where I'm pretty much excited about. Obviously, the advertisement is super strong. They're seeing huge growth there. If you take a look at their family monthly active people, it continues to grow even though things are the world is kind of opening back up. So they definitely have a huge following. Let me just say, Facebook, I don't have any of its social platforms, and I don't plan on having any. But I definitely see the strength and the stickiness of the business. So I do want to say one of the yellow flags, and this is something that's coming out recently, is their Facebook smart glasses. A lot of privacy questions are coming out from this, and I've actually done a segment, I forget where, but I've talked about how just because I don't think this product is going to do too well. I think just because the technology is there doesn't mean the consumer is there, or the consumers are ready for a product. So obviously, I mean, smart glasses technology is there. Facebook is showing it. The real question is, are consumers ready for this product? And even if they're not, I mean, it might be a flop. I'm probably leading to more of a flop. Not a market I believe will grow too much, especially because of the all questioning of always being recorded and stuff like that. But Facebook definitely, I want to say yellow flag is this. Might be causing some stock price action. Recently, though, we didn't see on September 17th, so today, we saw some analysts adjust their price from to $440, up from $425. So analysts are a bit bullish. I want to say my favorite thing about Facebook is the metaverse. So right now, first let me say, Facebook definitely has strong fundamentals. They have plenty of cash at hand. They have plenty of cash flow from operations, and their advertisement is super strong. But looking multiple years ahead, I think them kind of focusing in AR, VR, and the metaverse is where this company is going to see huge growth. In the metaverse, if we ever get there, I believe this is not something we're going to get there in the next 3 to 4 years. It's going to take a lot longer than that. But Facebook is one of the forefront with the hardware and also kind of creating these kinds of metaverse worlds. In August 19th, they introduced Horizon Workrooms, where you kind of enter a virtual reality world, and you're able to communicate. Here's a great picture of it. You're able to communicate with your coworkers and stuff like that. At the moment, I think we're still in early stages, but I do foresee the future coming out in this metaverse. So that's why Facebook is one I don't mind dollar cost averaging right now. The third company we're going to take a quick look at is Crowdstrike Holdings, another position actually in my portfolio. Like I mentioned, I believe some of the biggest winners are ones we already have in our portfolio. We don't always have to find the next big thing. I mean, sometimes there is the next big thing and we go for it, but most of the times I feel like we've done already a lot of the research inside our positions. So those are the ones we want to keep going on after. So Crowdstrike, this is in the cybersecurity market. Right now sitting at $262 with a market cap of about $60 billion. We can see from its 52-week high, the stock is down 8.3%. I want to say this is probably another one where it's more like dollar cost averaging times opposed to building up a big position. Recently, we have seen a few analysts kind of downgrade price targets or kind of just downgrading the stock, which I believe is causing a lot of the volatility in the market. I believe cybersecurity is something that's going to continue to be needed. Cybersecurity, I believe, is definitely the next. It's the biggest defense needed in nations, in personal computing, and everything from just like, for example, the metaverse. Cybersecurity is a market I believe will continue to grow. I do believe kind of COVID helped it out a bit just to bring it more bring more awareness to it. But I don't think COVID accelerated too much of the growth. Most of that growth, I believe, is still happening. Even as hybrid works, I believe cybersecurity is still a market in early stages, and Crowdstrike is definitely one of the forefronts. Recently, in September 16th of 2021, Crowdstrike launches Falcon Forensics for government agencies. So this is going to help government agencies have better analytic tools when finding some form of cyber threat or some form of cyber attacks, which I think is pretty impressive. I think always working with the government agency provides a great resume builder, in my opinion, and also shows the strength of that product. So they just released that. If we take a look at their most recent earnings, 70% year over year of annual recurring revenue is now up to $1.34 billion. I do want to say one of the biggest things is company's probably valuation, right? Based on ARR, this company has a price to sales of ARR to sell price to ARR ratio of about 50, pretty high at the moment, maybe a little bit lower than that, but valuation might be the biggest issue in my opinion, and for that reason this is more of dollar cost averaging. I mean, this company is positive in cash flow from operations, strong numbers in their balance sheet as well, so fundamentally in a great place. The final company is one I've been talking about I think for a few weeks now. I haven't really pulled the trigger on it yet, but this is in the gaming market, and this is one I'm really keeping my eyes out for right now. I believe this one is, out of the three, in forms of price point, is probably providing a better buying opportunity, but there is some kind of bearish sentiment or some negativity with it, and that is Activision, traded under the ticker ATVI. Is currently with a market cap of $61.24 billion. Let me just say, the gaming market, I believe we are still in the forefront of it. This is a market expanding mainly due to mobile gaming, but console and PC gamings are still pretty strong. From its 52-week high, the stock is down about 24%. And a lot of bad news, right? This is a company that's kind of gotten attacked by lawsuits right now, and recently they kind of got slapped with a new allegation of worker intimidation against union workers. So there's definitely some form of negativity for the stock price right now. I do believe that's why this is one that's really giving investors a buying opportunity if all those allegations are kind of false. So that has yet to be determined. But Activision has strong franchises. For example, World of Warcraft, Call of Duty, Diablo, Candy Crush, Hearthstone. In the upcoming months, in early November, they are releasing a new Call of Duty franchise right before the holiday season. Call of Duty Mobile is doing super strong. Candy Crush continues to do super strong in the mobile world. So Activision was the last player. And now I actually wanted to take a quick look at actual fundamental valuation metrics to see where my thoughts lie for all these companies. So Facebook, right? Facebook, if we take a look at EV to EBITDA forward, currently sitting at 15.09. I mean, not crazy valuations at the same time. These are it's at almost at its high point compared to where it's been since January of 2020. So for me, again, Facebook is more of dollar cost averaging. Activision, currently EV to EBITDA forward of about 14.76. This is levels kind of seen in May of 2020. So that's why I'm saying, hey, Activision, this is more of like, if I was really bullish, very nice time to kind of build up a nice base position of Activision for me. Advanced Micro Devices, 31.88. These are values kind of seen in May of 2020 as well. So actually, AMD doesn't look too bad. It kind of looks a little bit more than dollar cost averaging time. Same with Crowdstrike, right? Crowdstrike, it's a little bit high numerically wise, but it kind of values kind of sitting in mid of 2020. So valuations compared to early 2020 don't seem too crazy right now for any of these companies, in my opinion. Obviously, stock prices have gone up, but fundamentals have gone up, and that's why we're seeing the EV to EBITDA forward haven't really changed much. If we take a quick look at technicals, AMD right now in my time frame, not too overextended right now, so I'm really liking it at these levels. Same can be said with Facebook, mainly in the short-term time frame, right? In the short-term moving average that I look at, not too overextended. Compared to the medium term, a little bit more. Crowdstrike, same thing could be said. The only one that's really sitting next to its long-term moving average is going to be Activision, and that's why I believe this one's more of like a really big buying opportunity if I was really bullish in it right now and really had the capital to make it work. So these are the 4 stocks I'm looking at right now. I hope you guys enjoyed today's episode. Take care, have a good night, and see you next time.